What do you want to talk about? You want to talk about how
I want to
pissed
know how
off
you're
we are
doing.
about our neighbors?
Listen, if you got a neighbor right now, okay, who's looking pretty old and they might be selling, all right, you need to talk to them, all right? You need to talk to them and say, rent it out for a few years. Don't just dump the property and sell
Don't
it
dump the
because it's cheap right
property
now. Prices are
across
cheap.
the
They're low.
street.
They're low. They're not.
Oh,
They're not. You're not getting top dollar for that property anymore.
I want to go buy it just to make sure it doesn't go any lower.
Yeah, that's the thing, right? How low will it go?
How many people are thinking that same thought? Like, okay, can I buy that thing and turn it into 3 units now and rent it out and cash flow and save my property? Or is it just me? Am I the only person that's going like, fuck, man, this sucks? Let's get this party started, TK.
Well. Whose head's bigger than whose now?
Oh my God. I don't know if my head should shrink or swell or what the hell it should do.
Well, I think it's fine just the way it is, to be honest with you.
Appreciate that, TK. I know I can always count on you.
We got to keep things level here, okay? This is the Canadian Real Estate Show. It's not the Canadian Out of Reality Show.
Out of Reality Show.
Yeah, although sometimes it sounds like it might be.
Yeah. Did you go back and watch the episode from a year ago?
The Evergrande. We're basically like what do they call those? Mystic men. We're mystic men of the internet.
Are we mystical?
Yeah, find us online today to find out what's going to happen tomorrow, because we said should we wait for our guest to come on to talk about that? So today's episode is like a follow-up episode. All right, we've talked to a lot of people.
We've
talked to a lot of people
with a bonus though, because now we have Mark Mitchell. He's like the resident China expert in Canada.
We want the updated version on that.
He's mine.
A little bit is to talk about how we had, somewhat predicted the outcome of the Evergrande fiasco, right? Where basically by the end of the episode we figured that, in the near term, the Evergrande fiasco would be bullish for Toronto real estate. What were the numbers, Daryl, from the time that we aired our episode? Because obviously people are watching the episode and basing their decisions on buying.
You sent me this email. I can't understand the email that you sent me though.
Okay, but I think it was like the market went up like 15% between October and February.
Right, like we went on a crazy run
because everyone was fearful. And Mark, when did the government start stepping in and trying to, help out Evergrande this year?
When did Beijing step in?
Yeah.
Evergrande, they haven't actually helped out Evergrande at all. They're helping out the market, just not directly Evergrande. They've kind of let Evergrande die.
Well, when you say they aren't, you're talking about directly state-owned. What about all the state-owned companies that are,
Right. Oh, the state-owned companies a couple of months ago, they've started
coming in and paying off some of their loans. The city that they were going to build the soccer stadium, refunded their deposit, like these kind of things.
Yeah, so they started that a few months ago. They've really stepped up, say, guaranteeing the bonds. I would say, I think that was July or August. They started guaranteeing some of the debts of some of the smaller developers. And the big one was Country Garden, which when they stepped in for them, I think that's the biggest state support they've done.
Right around the time the market started to go down.
Yeah.
They were on to stuff. We're on to stuff. So what's our agenda today, Daryl?
I have no idea. There's so much stuff to talk about right now that I want to get to. And I definitely want to talk about Evergrande or Evergrande or whatever the hell you really call that thing. But I think we should save that for a little bit. Well, maybe I'm just still in Mexico time. But there's a lot of stuff going on right now. I don't even know where to start. I mean, we just had a nice interest rate hike. Maybe we want to start there. I mean, we do have Mark Mitchell and a couple of other experts that are definitely affected by interest rates. Anybody jump in whenever. I mean, it's not an interview, it's just a discussion. So, I mean, 50 basis points again. Is that another bazooka bomb, or is that is it just a pistol this time?
This episode is brought to you by Landlord.
This landlord software is a game changer. You upload your properties, right? You'll upload all the information, income, expenses, timelines, mortgage details, everything that you need to have so that you keep track of everything in your portfolio. And as you go through real-time adjustments in, rent increases and water bills and tax bills and everything else, they're going to actually give you recommendations on how to make your portfolio more efficient. And it just breaks everything down for me in a way that I've never seen before. Like Excel spreadsheets just don't cut it. I don't think there's a better program or app out there for investors, and it's free.
Please click the link below for your free trial offer.
Yeah, my perspective is that we're probably at the point where we're deliberately trailing the Fed to see what they want to do. So you're going to see a little bit of destruction in the Canadian dollar probably. But I mean, everybody said we have to back off earlier. I don't necessarily see a pivot happening, but we're certainly slowing the rate of hikes, and eventually we'll just hold. But the hold is the part that is what hurts, right? Like, it's not like we're going to go up and then come right back down. Yeah. We're going to stay at higher rates. Yeah, I mean, that's I think the bigger piece, the bigger story here, this rate hike didn't get nearly as much attention because people are just exhausted of it. Kind of like an "are we there yet" type of mentality.
Yeah.
The monetary policy report that was released was more interesting from my perspective, which, the major takeaway was, number one, they're acknowledging that interest rates are a major contribution to inflation through housing. So there's a bit of a positive feedback loop there. And then the other piece is that they're expecting to see the housing contribution of GDP, which is the largest individual piece of GDP, contract for the next 2 years and barely increase in 2024. So then that's residential investment, so commissions and home renovation. So our industry is due for a bloodbath, according to the Bank of Canada, which is already happening. Anyway, that's my 2 cents there.
Yeah,
so I think go ahead, Mark.
Yeah, I don't know so much. I can't see a world where Powell isn't on the phone with Tiff Macklem before the break. Right, you would think they would have coordinated at least somewhat. So I don't know if I think the Fed's going to come in at 50. I can't see us lagging behind them because our yields are going to jump right back up if the Fed goes 75 and we didn't. So I would think there would have been at least some policy coordination there before the announcement.
So what if the coordination is that they're going to go higher than us? What does that mean?
FedWatch has target rate probabilities for the next meeting at 375 to 400 bips Fed fund rate, and then December 14th meeting 425 to 450 at 48.2% probability, and then 450 to 475 at 43.4% probability. So we're looking at the higher bound of these original, whatever you're calling it, terminal rate projections that people were talking about. So it's 82.8% probability that we're seeing 375 to 400 bips Fed funds rate next week.
Where was the Canadian bet at before the 50 basis point?
Yeah, nobody cares about Canada, so we don't even have those kinds
we don't
of
even have
that.
Yeah, social media only. Yeah. I think just a perspective on this rate hike was that things are slowing down. I mean, there's somebody out there who's now going to start moving forward with their plans, because right now everyone's just been operating out of fear because they think that the rates are going to keep going up, and it's going to be another 100 basis points. I better not do anything. Oh my gosh. So the buyers are sitting on the sidelines, and I bet you 50 basis points told some buyer out there, you know what, maybe I should start my search again.
Yeah, but sellers are sitting on the sidelines too, right? Like, especially the sellers who are in variables, who are gradually bleeding out more. It takes 90 days to actually be technically in arrears. So I mean, the same argument could be made from the other side. I think you're probably more likely seeing pent up supply than pent up demand right now.
Assignment sellers are certainly not sitting on the sidelines right now.
Not from that
overpriced assignment sellers
yesterday. Holy cow!
Yeah. What was
Jordan's
that? Like
got
8,
an allocation in a building of right. It's like as much as some people get allocated in a new release.
Yeah,
Just
I mean, but what I will say is, we do have, I mean, to TK's point, I do have a ton of people looking to pick off really desperate assignment sellers. So I have a lot of cash circling, looking for those juicy assignment deals. And they're aware that they're probably going to cash flow negative and all of these things, but in some instances you can pick up condos today for, brand new units for what people paid in 2019 pre-construction or even 2018.
Wow.
Right. So
Wow.
it's kind of it's getting more and more attractive by the day too, because every time I send out one of these assignment emails, for every person who replies and says, I'm absolutely interested, I have 2 people who reply, say, hey, can you sell my assignment? So there's just a ton of assignment inventory coming to the market.
And what about mortgage applications, Mark? What's going on with that right now?
They're still very low, right? Like a lot of pre-approvals in the pipeline.
Still.
Oh yeah.
At
Yeah,
what
'cause
rates?
I just did one at 5.6 on an
pre-approval.
Yeah.
Somebody's hanging on to that. Oh.
Yeah. Well, they don't know what happens in a month from now. You know what I mean? Like 2 months ago, we were at 4.44, and then it bumped up to 5.1 within a few weeks after the UK crisis. So like it's might as well get them in. So I've got a ton of those, but very few buying because they know the prices are going to be down in 2 months, and your pre-approval lasts 4 months. So why not get it in?
And then what about renewals? Anybody coming up for renewal?
Those are tough. Like private lender, if you're in a private lending, like if you currently have a private mortgage, a lot of private lenders are pulling their money. So they're saying, I don't want to renew because I don't know where the market's going to be. And then these people have to find alternative financing or they have to sell. Yeah. So I'm seeing quite a few of those. A lot of people didn't know what the trigger rate was and have been told, and now they're selling. So I've seen more of those as well. So that, yeah, we're not seeing it in the media yet, but I think on the ground we're seeing there's trouble brewing. Definitely.
What's the highest increase you've seen so far from somebody who hit their trigger rate?
$1,500.
$1,500 a month.
Yeah.
Whoa.
Yeah.
We hear Justice Queen's been saying on Twitter she's like $1,000 a month now, and she has to move, which is kind of sad.
Yeah.
Jordan, are people like paying cash for these units when they're buying the assignments, or are they putting debt on?
No, they're putting debt on usually. I mean, like they're pretty cash heavy, depending on the assignment. Like if like one of the recent ones we did was purchased in 2016 for $400K, and then we sold it for $525. It's probably worth $575. Like once it's closed and it's an actual unit rather than just a piece of paper. So like that individual had to come up with basically $100,000, over 100, like 125,000 profit plus the initial deposit of 20%, so $80,000. So it's more than your typical 20% deposit, right? So that individual might actually break even. But yeah, no, it really depends on the buyer. Some people are putting debt on, some people just have cash. Like,
What are sellers right now? The number one reason that they're selling assignments or listing assignments, is it because they can't close, or that they're afraid of when it does come time to close that the unit won't be worth what they paid, or less than it is today?
UrbanToronto Pro is the most powerful business intelligence tool and database for the development industry in the Greater Toronto Area. Efficiently generate leads and gather real-time market insights on all GTA development projects. UrbanToronto Pro makes it easy to track projects as they move through each development phase, from proposed to complete, and see the latest updates on each one, all in real time, all within a few clicks. Our database tracks over 60 different items per project, and each item can be easily searched across single or multiple projects. Learn more about the most powerful source of intelligence on Toronto's development industry. Book a call with one of our product specialists today.
From the clients that are reaching out to me that bought with me, vast majority can afford to close. It's just like they don't want to. Like in one instance, there's a doctor client of mine. COVID pushed back the studies of their kids 2 years or whatever, and so they're not ready to move out. And so they were never investments. He was going to pay them off cash when completion came, but his kids aren't ready to move into them. He's not really sure if he wants to rent it out for 2 years. So he just wants to liquidate, and he doesn't care about making any profits, right? But the more common story is, I wasn't expecting rates like this. And so they're looking at they're going in. Usually it happens after they speak to their mortgage broker. They talk to their mortgage broker, they do their math, maintenance fees, property tax, mortgage, and they go, oh, wow, this is not, I wasn't budgeting for this. And so they want to get out of it. And then the calls that I'm getting from people who didn't buy with me, usually, the reason that happens is their broker failed to sell it. Or they don't even remember who their broker is because their broker pretended to be the builder at the time of purchase. And so there's like no connection there. And so they reach out to me and they're just like, hey, like I see you online. Can you sell this thing for me? I can't afford to close. And in some of those instances, these are people who bought 2 or 3. And it's a pretty rough conversation to talk to those people and say, hey, look, like, did you ever intend to close? And they're like, no. And it's like, well, unfortunately, I have to be the bearer of bad news here and tell you your greed is going to cost you.
Yeah. I had a call for 2 assignments. They bought 4 properties in 60 days, 2 resales, 2 assignments because the realtor told them that was a good idea.
Jeez.
Yeah.
It's crazy. It's crazy. Well, so now what I'm kind of starting to see, and maybe Dan might be seeing it too, or maybe not, but I'm seeing people that, were, screaming about inflation are now starting to talk about like deflationary spirals. Have you seen anybody talking about that?
Yeah, I think I've heard a lot of individuals mentioning that sort of we've reached that overshot period. There's been too much demand destruction, and deflation is probably next to what we're going to see, because you sort of are starting to get a lot of these supply chain issues easing at the same time as monetary policy, destroying demand. And so and I think we're seeing innovation as well, and innovation is deflationary, right? Like, you're seeing innovation on the manufacturing side and a lot of other different like hard goods, but you're also seeing it in our industry, where we just saw basically the doubling of potential units you can have in a dwelling in the province of Ontario, which hypothetically could be, a supply shock situation to the rental market if it's done meaningfully. I don't know if I necessarily believe that, but we can have that discussion. But yeah, I mean, you're definitely hearing about it. Deflation is kind of and I think that, by its very nature, like, these central banks are kind of forced to overshoot, because you really don't know the impact of these rate hikes until a couple of months after, or like half a year after they've happened, and you kind of wait now, and then you rush to get it back down once you've realized that you've caused deflation, like you're describing.
Yeah, the portion of the CPI that housing represents, right? That's a lagging indicator on its own. But rental prices are higher, so I know housing
rental prices are higher and carrying costs are higher, so that's going up, and the gas is going up. Yeah, but you've got inventory levels on useless shit that is like piling up like crazy, and I guess those prices are coming down. I mean, who needs a sofa after you just spent every penny you have trying to pay last month's bills, right?
Yeah. I talked to a contractor this week just to help a client out for a rental property that got trashed. And even he said he was not as busy, and there was a lot of flexibility too. So I think that there'll be some labor deflationary pressures as well too, right? Guys will be more available and they won't be able to gouge people as much. I don't know if that's really going to be that much of an impact.
What's interesting to me is like a lot of luxury buyers are still making moves. Like if I look at like the last week of deals on my team, it was like a $2.2 million pre-con, a 1.8 and a 1.7. It was like very unusual. Normally we're selling stuff in the 5 to 900K range, right? So to see, and then that's been the case for the last 3 months, is like, we're not selling anything under $1 million.
Local buyers?
Yeah. We're selling way fewer condos, but they're all to end users and downsizers. And they're all people who are like, the builder's asking me for a mortgage pre-approval. Can I provide a comfort letter instead? Because I'm just going to pay this thing cash.
That's what I was just going to say.
What's the timeline on closing? Like those ones
anywhere from like 2 to 5 years. Like some lingering inventory of projects that are mid construction, like way out already past grade. Others that just launched, like just any kind of luxury boutique product, or even boutique-ish. Toronto's definition of boutique, which is like 150 units.
Yeah.
So now we have things brewing all over the place, and tempers are starting to rise, and people are pointing fingers at each other, and everybody's like starting to like get crazy. We got the rally in BC, Honveer or Honveered, or the Honveer effect. Like these are all part of the lexicon in Canada at the moment. I can't tell if anybody's serious about this shit, or if it's a joke, or what's going on. I feel like it was a joke, and now it got really serious all of a sudden. Now we have one coming on the 6th, I believe, in Toronto, and
we're going, right?
You're goddamn right. We're going. I'm shopping for Kimballs and like extra battery packs, man. We're going live the whole day at the rally. 100%. Like, I got to see what's going on out there, because I honestly don't have a good read on whether this is serious or not. I mean, it kind of probably, I don't know if it should be, but I mean, it definitely could be. What do you guys think about this thing?
I think that it was started with intentions of being serious, to be honest. Like, and I mean, look, this guy's smart and he's successful in the real estate industry. Like I've been saying from the start, I'm like, this is a networking event. Like this guy just figured out a way to create an aggregate distressed sellers very quickly. Like it's a distressed sell. It's a future distressed sellers event. Seriously.
Yeah,
No,
yeah.
100%. Yeah, no, listen, you better bring some cards.
Yeah, it's creative.
Right.
So I mean, yeah, I think like I mean, look, like it is what it is. It's silly in the grand scheme of things, but it's a sign of the times that, and this happened in the 70s, 80s, and 90s, I believe, as well, right? Like I think they were doing a marathon. They were back then. People were running, right? Those were like the Terry Fox days. Protesters were like they were physically active, I guess. But so. You know, they did like I'll find it. I'll pull up a link and I'll send it to you guys. But it was like a marathon for like to stop interest rate hikes in the early 90s, I think.
Yeah, listen, I used to do the walk for Israel every year. Like, this is what people do. They walked and they ran marathons. Now what do? We like hold barbecues or have dinners.
Bring a lawn chair. Yeah.
Gorge for $1,000 a plate. Crazy. Oh, by the way, if anybody's watching this show, you should like this show right now and you should subscribe to the channel. TK, we never say that and no one ever does it. Maybe if we said it,
maybe it would happen more often.
Yeah. Okay, so the reason that we are all here is to recap that year ago and to talk about Evergrande and its effects. And obviously, like, it did something, because something broke all of a sudden, right? And we can downplay it a bit that maybe it wasn't a Lehman moment, but like it was a domino for sure, wasn't it?
There's a new Lehman moment now with Credit Suisse anyway, right? I think we've had like there's like
and the UK. What about the whole UK?
Yeah, that was a Lehman moment. There's like this thing on Twitter. It's
Boom,
like, babe,
boom.
are you okay? You haven't said Lehman moment at all this week,
right? But seriously, there's a lot of moments that are pretty monstrous in size, aren't they? I mean, the UK pension plan, like the entire thing collapsing, isn't that big?
Yeah, well, it's big in the context that they ramped up quantitative easing again, I suppose. So,
right
I mean,
away.
the central banks are bailing this out, right? Like China hasn't been having massive increases in interest rates like everywhere else in the world. I mean, I think that we're just starting to see the mess forming. Like, and there's no way. Eventually, all of these things come out in the wash. They're just trying to slow the impact so that we don't have these Lehman moments and end up in a global financial crisis. But to me, that just means I think we're fucked for like 10 to 20 years rather than like. One or two, right?
But isn't that the Lehman moment that like now we have to come up with a whole other giant mess of fake money to push it on down the road again?
Yeah, I think so. I agree with that. Like, I think that we've just completely detached from like real, like, I don't know, the money doesn't mean anything anymore.
Right?
Like, seriously,
it doesn't.
Yeah.
Seriously, like, like that's it. Like, we're just entering this new world of the global financial system where like and like there's so much disparity in classes, but also like class mobility and like asset distribution. Like that's why you're starting to see like everybody wants to get rich quick in Canadian real estate. Everybody wants to get rich quick on GameStop. Like people have to take insane risks to jump from the lower middle class to the upper middle class. And like, I don't know. I don't see how this ends nicely. Like I think we're just completely effed, and it's going to take 20 years for things to feel normal again. Like that's not, I don't mean to be too grim. I don't think it's going to be bad for like, but it's going to be bad for five years probably.
So, but define bad, because I mean, if we all think that they're just going to pull out the same bag of tricks and just, okay, so now I don't know what's after trillion, guys, like what's the next zero that they add, right? It's like, does like, okay, like
for everybody on this call, like, does life feel financially the same today as it did in 2019? Better or worse?
It's there's probably some interesting perspectives. Yeah. I mean, I feel like
putting out more money now than ever before.
Yeah.
Right.
Yeah.
Well, but bringing in more too, right?
Yeah.
Yeah, so it's kind of an interesting That's an interesting question, because I actually personally feel like I shouldn't be spending any of the money that I'm spending right now, because I mean, I personally never know when my next dollar's coming, if it's, 3 months from now or 2 years or 3 years from now in my business, right? Or at least in one of my businesses. But like, I definitely feel like it's a lot harder to let go of the money right now. And I'm certainly less willing to go to a nice restaurant and pay double and get a shittier meal than I used to get, right? And so I don't know if that's like my mentality's changed, because I'm like, shit, I better hang on to this stuff a little longer, or because the food is just really shit and the service is really shit right now. Right.
It feels tighter. You're right. You can feel it when you're out. Like everything does feel tighter than it did even 6 to 8 months ago. So yeah, I agree with you on that.
Yeah,
So I guess the reason I asked the question is because I think that what the difference that you feel right now compared to, a period where I would say things felt a little bit better months or years ago is probably going to perpetuate for at least a year, maybe 2, right? That's just my, like, that's what I don't think it, like, for the average person feels that bad to be in a recession. For a lot of people, it really sucks, but it's gonna be shitty comparatively, but it's not gonna be brutal. It's just gonna take a long time, I think.
Well, yeah, go ahead, Mark. Sorry.
I read an article the other day that called it the most unfair recession that we've ever seen. And I don't know if unfair is the correct word, but probably most unequal recession. Because there's very much 2 Canadas going on right now. Yeah. I think and this is what the article said, is that you have one group that saved a lot during the pandemic, kept the money, still has the money, and they're not really affected by interest rates. And then you've got another group that barely made it through the pandemic, and then now they've got inflation right after. So, and they're very affected by interest rates. And that, to a certain extent, that's why inflation is so hard to get under control, because there's such a large amount of cash sitting out there that was saved up during the pandemic. So I think it feels very, very tight for a lot of people, and then for a lot of people it doesn't so much. And I think but we only have one central bank policy, so I think that's a real problem being faced by the bank right now.
Or how about all the small businesses that barely hung on during lockdowns and you know what I mean? Like, depleted all of their savings just to stay alive. And now it's like, well, welcome. Now you're in a recession.
Yeah. You don't have the customers. Yeah.
No, and listen,
but there's also increase in revenue streams, right? Like, there's a ton of people out there who've innovated, right? Like, the people are taking on jobs where they're working from home. I've met more people working 2 jobs now than I have ever before. Like, there's people who are out there working 2 jobs, and one's from home and the other one's on evenings going into the office or whatever it is. So I think that there has been some sort of shift in people's capabilities of making money, and basically, right? Like, Darryl and I are getting rich off YouTube views, clearly, right? But that's one view, right? There's other little things that we're always working on, and different, same thing with all you guys. And that's something that I think a lot of people, that's really common, especially with younger people, right? Which is important. So I think the older generations of fixed incomes, the people who are, struggling to be able to adapt to the times, they're the one. That's the unequal.
But what about the young people? The young people that, like, they can't afford a home, and now they can't even get a goddamn rental because the rental prices are going bananas, if they could even get one or get accepted for one after doing their little dance and sending letters and saying why they're the best possible tenant now, right? Like,
but they got low overhead. They got, their life is cheap, they'll be fine. They'll make it through this,
Well, one of my friends is an underwater welder and rents in Cambridge to save money and commutes downtown Toronto every single day. And I was like, that's a problem, when an underwater welder is
like the best highest income trade job out there.
Yeah.
Yeah.
It's crazy.
Yeah.
That's crazy. And so, but what do you even save in Cambridge now? Like, how much is the average price in Cambridge, for God's sakes?
Yeah,
right?
Not much.
Especially after gas inflation.
Yeah.
So it's interesting, that article that you were referencing, Mark. I don't know if it was the one from a year ago, but like I think it was like the most unequal recession. Ben Tal did some research on it last year, but now he's updated his research this year, and the only area where we're starting to see wage inflation is actually in that lower quartile of the jobs. So basically, talking about gas, and inflation, people just stopped going to work because it wasn't economical to go to work. And especially and you can feel these vacancies in those professions, right? You see it in call centers, you see it in airlines, you see it in the service industry, restaurants, right? Hotel industry, but you don't see it in the higher quartile. So now employers are forced to pay people more, and you're starting to see wage inflation happening in the lower end of the market, which I found, and this has just sort of started heading into this year. The question, and this is sort of where the Bank of Canada wants to go and destroy jobs for shits, is how much of that wage inflation can we afford before it starts spiraling into the economy, your wage price spiral. So it's really like they're really, really facing a tough challenge right now.
Yeah.
It's absolutely insane. So you actually touched on it for a sec, Dan, and then if we go back to last year's episode, Jordan said something very profound, and it was like, if we want to get out of this crisis, like we have to make more houses, right? We need to make it easier for people to make more houses. And so you touched on it briefly, saying something about doubling the housing supply, I think, or the rental supply, or the potential supply. I think it's actually tripling based on this legislation. But let's talk about the new Ford legislation that is, I think, designed to make it much easier to get more units on the market one way or another. When you said doubling, is that what you were talking about, Dan?
Yeah.
Yeah. So, okay.
Yeah.
If we take a single family home and add more units to it.
Sure.
Theoretically.
I mean, that's politically innovative, right? So yeah, you're doubling. I mean, people have to build the units still, but yeah, hypothetically, you can 2x density in Ontario now. That's obviously not going to happen, but if 10% of the market puts a basement apartment in now because they don't have to go get any zoning changes or minor variances to do so, or they add a garden suite as an example, I mean, that should ease some of the supply challenges, I think. I do feel like it's going to be meaningful, especially when you're in a recession and people are trying to make ends meet.
Yeah.
You really only have one option. Like you can liquidate, but a lot of people are going to be at a loss now. So what else can you do? Well, you can increase the income of your property.
I don't know who put it out. Was it you, Dan? Somebody was saying something about somebody that they know. They're renting moving into their own basement and renting the upper portion of
Vass mentioned.
Was it Vass? Right.
I think didn't he mention it on here, or maybe he
did mention on here.
He was talking about it on TikTok as well. Like sort of there was this, you can save your face or save your ass kind of thing. Right?
Yeah. So I mean, isn't that crazy that people are even thinking about that, right? Like even think like, you know what, can you imagine going to your significant other and saying, you know what, honey, I think you, me, and the kids should move to the basement so we can keep this thing, because our payment is going from $2,000 a month to $3,900 or $4,200 or some crazy number, right? And
I told you to get fixed.
Yeah, I told you. Yeah.
If she says no, she's not the one. Okay, Daryl. That's
right?
it. Yeah.
Maybe.
We're moving to the basement. All right. That's it. Pack your bags. Let's go.
Thing. What a horrible thing to even have to consider. I have people DMing me on Twitter saying, like, what am I supposed to do? Like, I saw that tweet or I saw that. Should I consider that? Because I really want to buy a house right now. And I'm like, oh, what? First of all, why are you asking me? Because like, I don't know what to do either. Right. I'm just trying to give somebody some advice based on what I would do, but like, I'm not the smartest guy. No, how do you guys actually tell people what they should do right now?
Very carefully.
Yeah.
Very carefully. You'd be very careful with your choice of words and try to understand the underlying motivation behind what they're saying.
Yeah. It's like, why does somebody want to get in so badly that they want to live in their own basement to ride out the storm? Like, what's wrong with renting? I don't understand.
Yeah, we fetishize homeownership in this country.
Yeah, I have some clients who purchase, it's rare, but I have some investor clients who purchase really expensive condos, like 2, 3, 4 million. And they're not for her to live in. They're for rentals. She doesn't care about negative cash flow. She just likes tenants that have really high income. And like one of her tenants rented a $8,000 a month unit from her and is using it as a walk-in closet because he has the penthouse in the building. Okay, so she just likes like those like ultra high echelon tenants that like, you know, never miss rent type of thing. It's really it's a different way of investing. But what I found with helping her with some of her properties is there is a lot of very high income people who choose to rent rather than buy, who have absolutely no, like 7-figure income. They have no problem purchasing if they wanted to. They just choose to rent. Which it's interesting because you go to Europe and that's pretty common, but here in Canada, it's rare to see that.
Yeah, a lot of people are like, "Oh, you can't get rich without real estate ownership." It's like, well, if you look at you can't get like middle class rich, but you can certainly get uber wealthy without it. Like, as people climb in net worth, the concentration of their wealth that is allocated to the primary residence or real estate shrinks, and because they focus their money on business. Which yields which yields way better. Like, don't get me wrong, real estate is exceptionally good investment for people who need, especially like primary residence real estate investment is an exceptionally good investment for people who need a savings vehicle, who need access to leverage, who need shelter, and who wouldn't be able to do more productive things with their capital. You have to be a really bad investor to not outperform a single family home, even after leverage. But you have to be like a pretty bad investor. So,
over the long term, yeah.
Well, yeah, you go back to like, I think like whatever, if you enter this new era of real estate price growth, like I think mid 80s, it's like 6.11% per year.
Yeah.
But levered.
So let's assume everybody's in a 5x leverage position, but you can lever into stocks too at a 5x.
Oh,
yeah,
can you imagine that right now?
Let's not get into the debate today.
God, you get fucking hammered right now.
It's definitely been exhausted, and I'm sure that there's some people out there who are capable of renting and doing better than homeownership, but majority of people, homeownership is the way to go.
So
majority of North American people,
of Canadians, yeah, of Canadians.
Is it Canadians? It's North America. Actually, I don't even think you can get a mortgage
The States,
in Mexico.
the flux in prices in the States is way different. Like they're happy to be selling a house for $300,000 or $400,000, in retirement, and the bulk of their incomes is through their pensions and investments and stuff like that. Where here in Toronto, at least, it's like you better have $1 million home paid off, otherwise you're working till you're 70.
Yeah. I don't know that this new legislation, at least for splitting up a house into 3 units now, I mean, maybe at some point it's going to have a bigger impact, but I'm just trying, like with prices where they're currently at still, and then the work that you'd have to do to split it up into multiple units and where interest rates are right now, like I just don't see much penciling out unless maybe you've already owned the home or you're about to inherit the home. Especially if you're going to add a garden suite for a few $100,000 in Toronto right now.
Yeah, the garden suites we won't see a lot of, but I think you'll see a lot of like basement apartments, etc.
Especially for kids. Oh, sorry. Go ahead.
No, yeah, it's all good. Go ahead.
Especially for kids still living at home, right? Where kids are staying until they're 25, 30, 35 now. So why not build the kid a basement suite for him to live with the wife and grandkids? So I think we'll see a lot more of that.
You could have done that before, though.
I kind of disagree. Like I feel like people just build basement apartments and just let people live with them, and they don't really care if they're legal or not. Like I feel like that's
some people do, yeah, for sure. But those people have already done it. But the people who do like to follow the rules, like it's like they're like, oh yeah, well now I can build a basement apartment. And also
I feel like investors are going to be more along those lines, not put your kids in the basement.
We also haven't seen meaningful financial stress in this country in 25 years. Right?
Yeah.
Realistically, like interest rates have been going down since the last trough of the housing market, which was in 94. Really, like, I mean, yeah, they bounced around a little bit, but functionally they've been going down basically since then. So I mean,
found motivation to.
Yeah, I mean, there's financial incentives are going to be what's actually going to create the supply from my perspective.
Yeah.
So we have the Honveer movement. Did that have an effect? We have this new legislation that we're not even sure is going to have an effect. Like we've thrown in taxes on top of taxes. And I think, Dan, you did a video about this, or somebody, maybe it was just you talking about it last year. It's like we keep adding new like wedges into the wheel, or like, like new knives to plug holes and making new holes all over the place in just a fucked up, completely broken down system, right? It's like literally a bunch of spaghetti holding this thing together right now.
Yeah, and you're dumping more water on the other side of the dam, which is, increased immigration targets, year over year. Like, I actually think, I mean, look, I don't know. I can't forecast at all, but if you were to look at history, 89 was the last time that we saw immigration hit 1.8+% of the population. We just saw that in Q2 of this year. 1989 was the last, 89 was the last time it was 1.81%. Then after that, it was 90, 91, 92, I think, was all net decrease in immigration. So the economy needs to be decent so I think it's really going to become an economic question. Like if we do repeat what we saw in the early 90s, we're not going to hit those immigration targets from my perspective. I think people are going to elect to stay home or go home because the Canadian dream is not fulfilling itself. If Canada's economy, if Canada's economy sucks comparatively to where they could, they're like, okay, if I'm going to live in like sort of a lower middle class or second world position, then I might as well do that in, a place where it makes more financial sense, where I'm around my family or whatever. Like, I don't know. I can't really speak to these situations, but that's kind of like the sentiment that you're hearing, right?
It's a job promise. Yeah.
But what, let's just say for argument's sake, immigration cuts in half. Like, it doesn't solve anything. 220,000 people coming in still breaks the system.
Well, everybody's saying, does it though? I don't know. Like,
maybe not. Everybody's saying, look, population doesn't do anything, right?
Well, I don't like. It's just funny because like people who are Super Bowls, you can be like, immigration is so significant. It's like, okay, well now we've just released a supply solution that could easily house all of those immigrants. Like, there's millions of homes in the province of Ontario. If 20% of them add a unit, then all of a sudden you've got houses for all of those, new residents mathematically, right? So, but then they're like, oh no, well, that's not going to happen. It's like, okay, well, how do we know immigration is going to happen either? We can't really forecast. Like, when it goes back to like the advisory question that you're saying, it's like, look at the best case, look at the worst case. Like, it's just modeling, right? Financial modeling. Investment bankers do the same thing. Best case, worst case, base case. If the deal makes sense based on your worst case analysis, then just do it. Like, and if you've looked at it and you're like, okay, I can survive 10% interest rates or a huge recession or whatever it is, then it's a decent deal.
Yeah. That's why I put something out the other day. Like, if it makes sense in this environment, then, in a little bit of time, it's probably going to make even more sense.
That's what's really interesting to me about the people offloading their assignment condos right now, actually, is looking at some of these individuals who bought 2 or 3 condos, 3-4 years ago, and going, well, if the worst case was that the market did what it did, at least in the last 2 years, particularly the last 6 months, you were going to take a hit, like in excess of 20-30% of your net worth. Right. So what's really interesting to me is like people who had income to support, let's say, a $500,000 mortgage, bought themselves into $1.5 million worth of condo commitments. Right. So like it only worked in the absolute best case scenario. Anything other than best case scenario, and you got slaughtered. Right. Like, how else do you close on those units? Unless there's significant equity in them and you can flip 2 of them and close on the 1, right? Instead of closing on all 3, which is really interesting to me. I don't know if it's just brokers doing a really good job marketing and talking people into these things, or if it's just, it's been decades of like low to no pain.
Listen, I've said it on the show before. I mean, I'm a developer and I don't understand why people buy pre-con other than as an investment for later. I mean, the system necessitates it, if that's English. I mean, we need those investors to buy units 5-6 years before the building's built, because not too many other people are dumb enough or able to even do that, right? It's very hard to, like, you start thinking about it maybe when you're gonna get married or you're gonna like move out, and by then, like, now you got to save $200,000 all of a sudden, right? Like the whole
I think it's the success of the previous investors. Like, I'm just thinking about all the investment strategies when we were doing duplex conversions and buying them for $350,000 and flipping them for $600,000-$700,000 in Oshawa. No one was doing it at the time. Now all of a sudden, you can't find those properties anymore. It doesn't make sense. Flipping condos, people were buying pre-cons at great prices and flipping them, assigning them, or closing on them with a 300% return or whatever it was on their money. And everyone said, oh, that's a great investment. So then developers smartened up and said, why are you guys making all the money? Now I think garden suites and laneway suites.
I don't think it is that. I don't think developers smartened up at all.
No.
Right? Because pre-con used to be a 5% premium to resale. Now it's a 20% premium, but the margins have gotten tighter, not bigger.
For who? The developer?
The developer. Their IRR might be like a little bit higher, but like that's just because of low debt over the pat. But like in terms of the gross margin, like cost to build and saleable cost, I think that's gotten tighter.
It wasn't
if
them.
They're not making more money.
It wasn't smartening up. It was just out of necessity, is what you're saying.
You got caught. You had to go. You had to like push the project
like
through
I'm
in the last couple of years, right?
Like I'm absolutely fascinated by the fact that developers are still launching commodity project today, like in this market.
I can't believe that's what I was saying the other day on Woze's space. Is like if you're a developer and you're launching now, either you're so super well capitalized that it just doesn't matter. Which there's a few guys like that for sure. Like Madame just launched something in Mississauga, right? So I mean that can't be because they have to push the project through because they're Madame. I think.
No, and with really juicy, like really juicy deposit structures and incentives. So like they'll actually move. It's not going to oversubscribe like it would have 6 months ago, but they'll sell 40, 50, 60% for sure.
But then you see some guy you never heard of before launch a site that you didn't really know about. And it's like, like that guy better sell out or that thing's coming back on the market, like the land, right? And there's going to be some pissed off people that had deposits on that site.
Yeah. But most of those guys would have bought the projects long enough ago where they probably were never forecasting the prices that they got 12 months ago. That was like, whoa, this is interesting. But cost of construction might balance that out. Because I think Opus just released something, and it was like much lower than what they had just sold it for a year ago. But I guess they've looked at their situation and said, well, we're gonna have to move these units no matter what, right?
Yeah.
And these are the prices that the market's saying right now. So,
and the numbers pencil a lot better too as soon as you're out of the 416, right? Like I was talking to a legacy developer, like family developer, a couple of weeks ago, and they're pivoting. They're doing Barrie and Hamilton and stuff now. They don't want to. They've built exclusively in the 416 for like 50 years, and they're done. They're moving to. Barrie.
There's a lot of people in Markham that said that they were downtown Toronto developers and that they wouldn't ever go anywhere else. And then all of a sudden, they're building up Markham and they're building up Scarborough. And if you look at some of the land registry in Scarborough, like there's some monster players that have had some big pieces of land on that Golden Mile for a while, right? Like, but. So let's just back up again to the basements, for example. Like now you can do the basement, but is there incentive to do the basement, right? I think that's the thing that they missed with part of this plan. But I think they actually, which we haven't even talked about, purpose-built rental, like purpose-built rent. Did I say that right? Purpose-built rental buildings are, I think, actually being incentivized in this plan. It seems like inclusionary zoning won't have development charges, and purpose-built rental development charges are going to go down considerably. Like, do we think? Did anybody else see that?
I think that if you, regardless of what happens in the policy side, as the economics make less and less sense to push. Look, the reality is like condo buildings in a lot of cases are purpose-built rental. They're just vehicles for mom and pop to aggregate a bunch of purpose-built rentals into one tower and socialize the cost of renting in a lot of cases, because you have a bunch of owners who are losing money. I think that, Jordan talking about developers, like their margins aren't exceptionally good, even selling 20% over. As construction costs come down, as rental rates climb, and as owners, like as rates continue to climb, the incentive for owners to rent becomes higher. The cost of ownership every month, sunk cost of ownership every month, every time the interest rate goes up, sunk cost of ownership goes up, incentive to rent increases. This is just like, we're literally just 50 or 100 years ahead of most European countries that have high ownership. Like we're earlier in our cycle. We're heading for late stage capitalism, high institutional ownership, high investment ownership,
high rental
rates, especially among young people and especially in urban areas. Like this is just where this goes. There's no way that it doesn't. You're seeing it happen in the States right now, period. Even in the single family detached space. Yeah. Like it's just, and there's no really And,
you will
and so
own
what,
nothing and you will be happy. It's
I mean,
happening though, which is fine. I mean, who
I think
gives
that makes sense for the majority of the population, to be honest with you. Like most people shouldn't be managers of their own homestead. Like, like there's like this world right now, like, and it's, I think it was Adam Smith, specialization and division of labor, right? Smithian economics. As we get more into white collar knowledge work, whatever it is, like I know guys who, one of my buddies is an electrician. He said his most common call is that the fixture isn't working in Toronto, and he goes and changes a light bulb and makes $350. Not joking, right? So a lot of people can't really be tasked with the ability to own a home.
He sells that labor.
Yeah. Well, I mean, he gets paid to show up, right? Diagnosis, and then it was
go
just
up and
a
down
light
that
bulb.
ladder
Don't call
8
me next
times.
time.
Yeah.
Well, no, he'll tell them at the end, like, hey man, I feel bad charging you for this, but I do have a minimum to show up. That's the bulb was out. Maybe wait till his wife's left the room to tell him, but the bulb was out. Just change that next time. Here's how you do it. But anyway, I mean, I'm just saying, like, the average person isn't necessarily cut out for home ownership, and then we're gradually learning. At least in our generation, we're gradually learning that. I think
at one of our first episodes ever, me and TK, we talked about the Manhattanization of Toronto, and that's just it. It's just a transfer in percentages between ownership and rental, right? I mean, it has to happen by necessity. But the real problem, I think, right now is that I can't. Maybe I'm just a perma bull or whatever, but like I can't see population not pushing up rental or pricing in for ownership like simultaneously or one or the other. Like somebody is always going to be fucked in this supply situation. At least
I think it's actually getting worse. Right? Everything's getting shelved.
Nobody's
getting
right. And
and
try
there's a lead
penciling
time,
out.
right? So yeah, so you say, okay, cool, now you can build basement apartments. Cool. A bunch of neighbors gonna be having fights with each other, like how to piss off your neighbor in the Kingsway 101. Like, and that's good. And I think that's a really good step that we're taking. But there's a lead time between that policy enacting and actually seeing any meaningful increase in supply. I mean, and same thing with condos, right? Like if you need supply 5 years from now, you got to start it today. And no, it's just interesting seeing the
deals don't make sense today.
Yeah, supply side's getting worse. Your costs, if you buy today, even with 30% off peak prices, you're still paying more on a monthly basis to own it. If you rent today, you're renting for more. There's just like there's no escaping what like higher cost of ownership, right? And when people tell me like, oh, pre-construction or just condo investing in general in Toronto doesn't make sense because it no longer cash flows with 20% down, and it hasn't for 3 or 4 years. So these people aren't investors, they're speculators. I'm like, okay, so that's the same thing that happened in Hong Kong. It's the same thing that happened in New York. And you're right. It doesn't make sense for a lot of people to invest in negative yielding assets. But that's exactly why you're going to see homeownership rate decrease over time and renting pool increase. Like it's just a natural progression of a major metro, is it not?
I think so.
It has to.
Yeah.
There's no other way.
So, yeah.
We're not making more income. We're not getting more money.
Well, some people are, though. That's part of it, right? Minimum wage is going up. And I mean, anybody on this panel not do better in the last 12 months than even the previous 12 months?
I didn't.
Yeah, maybe not the right industry to talk to.
Maybe,
Yeah.
No, but listen, some people, even when we talked to Frank Leo, he said he's busier than all hell right now, right?
Yeah, but that's a realtor's default line. I do think,
Maybe.
yeah, but I do think like
busy.
one guy
How's
on
the
my
market?
team,
Busy.
yeah. So one guy on my team like had a monster year, like his best year of all time in real estate, like doubled his numbers from last year. Some people perform really well in this type of market, particularly in my experience, like the educational agents who like really go out of their way to advise their clients tend to do maybe not better than in a bull market, but certainly perform at a high level versus their other, their competing realtors, we'll call it, because it's not as easy as just throwing a signpost in the yard, right now.
Yeah.
So he'll take home like more than he ever has. And I'm stoked to see that for him. But the vast majority of people on my team or just other colleagues in the pre-construction space, yeah, they're not doing the same numbers this year as they did last, and rightfully so. A
lot of burnout in the industry. Actually, a lot of agents I've been talking to are like, you know what? Like after the market changed, they're like, I started, I painted the fence at the cottage, and then I was, working on my boat, and then I, started to, sell things online that I bought from Facebook Marketplace, like weird things like that. I think a lot of people are stressed out, so they're taking like a leave of absence.
They're doing
Maybe they
arts
made
and
too much
crafts.
money.
Yeah,
They're doing
I'm
arts and crafts. Maybe they made too
Arts
much
and
money
crafts.
last year.
Learning
so
how to change light bulbs.
they're
right for 350
Don't go
a
too far.
pop.
350.
Don't go too far. For 350 a pop, that's a good gig. Yeah.
Great gig. So
I mean, my personally, my best year was 2017, and it's because I'm a Bear Gang member.
York region.
But yeah, I mean, we got decimated, and people started flocking to me because they were in fear. And I mean, that was kind of the start of this whole thing for me, to be honest with you. And I would. It looks like this year will be the same, and maybe we'll have a bear market again next year. But I will tell you something: I will be bullish one day when I feel the bottom is in. So pay attention.
yeah,
It's gonna be a
well,
while.
but that's what I said like over
I
the
don't
last
buy
few
it.
weeks is there's some bears out there that are very bullish right now, like guys I've known for a long time that, like, I've said it a few times, they freaked me out like every time I talked to them, scared me for years. But
I
now
have a
they're
lot
like,
of clients. I have a lot of clients like that who haven't
Yeah.
bought with me, but have been back and forth with me for 4 or 5 years. And
now
just like,
they're-
price is too high on these pre-cons, right? And a lot of them are coming back to me now, telling me like, keep me on your list. Every time you have a distressed seller, every time somebody's panicking, send it to me. If it makes sense, I'll buy it.
and they've
But I
saved
think
up
Sharks are
cash,
circling.
right?
Yeah, but I
geez.
think the majority
yeah.
of them, and what I'm seeing so far is like right now I'm seeing condos, assignment condos sell for the same price as purchased like 2 or 3 years ago. They're not quite biting yet. So I would say by and large, those individuals are still waiting for more blood.
Right. Yeah. And I like, I've been saying for a while, like, I feel like there's just a bunch of people waiting on the sideline for somebody. Maybe it's Dan Foch to wave that flag and go, 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 go. I'm a bull now. It's time to go. I'm joking, but I'm serious. Like, don't you feel like there's so many people calling you going like, is it time? Is it time? Like,
There's
I've
a lot
got
of
some
cash.
cash.
Yeah. I think it
got
was
cash.
Yeah.
I think it was Dan who said it's easier to catch deals on the way down than the way up, right?
For sure.
Yeah, like, and I think there's some truth to that because I
100%.
remember
That's a good line. I like that.
Yeah. And everybody was like, don't catch a falling knife. And I was like, you know what? But if you can catch a falling knife, it's fucking impressive, man.
Well,
Yeah, right.
worst case, you get a little cut and it lands on the floor anyway. You just pick it up, right?
You pick it up, and then hopefully, you weren't too far from the bottom.
Well, like the reality is every time that the market goes down, there's less risk below you. Like you're closer to the bottom and further from the top. Every time the market goes up, you're closer to the top and further from the bottom. So as the market declines, the downside risk gets washed away. And the reality is I don't give a shit if I'm buying something that I buy for yield. So it's different. But, if I save 10 grand and the market bottoms in 2 years and I lose that 10 grand on the purchase price as an example, because I am buying properties that are cheap enough that, 10% is, or 20% is like, just a couple of $1,000 or 20 grand, but I'll make that money back in income in the next 2 years. So for me, it's like, I don't really care that much. To me, if I find a good deal and I'm comfortable and I'm happy buying it, on the assumption that like I closed on a couple of properties last week. I bought a property last summer and I was buying those, making the assumption that the market was going to drop another 10-15% on the value that I paid for those properties. So if that's my worst case scenario and I still like the deal, then it's a good deal.
That's a great deal then,
Yeah.
for sure.
Especially in the lower markets, they're less impacted by these rate hikes too.
Totally. So I want to touch on one last thing before everybody has to go. Mark did a video on it and we spoke about it. I think maybe Dan brought it up or maybe it was Jordan. So flight of cash from China. Mark did a video on it a couple of weeks ago, I think it was. We talked about it last year where, TK started off the show saying maybe we saw that back in last October through February, that, the Chinese cash coming into the Commonwealth and pushing up prices. But do you feel like maybe there might be another round of it coming? I mean, they must be wanting to get their money out like crazy. What do you think, Mark?
I just read an article actually yesterday that said that there's a lot of students in Vancouver and there's a lot of money just waiting to jump in as soon as they can get it out into the real estate market. And that the foreign buyers ban isn't going to really stop them because it's all Chinese that want to live here. They want to get out anyway. And it's students that are living here as well. So yeah, I think that there's still a lot of money trying to get out.
Yeah, and then I think Jordan was talking about that most of them are technically, or they are PR here anyways.
Yeah.
Or family.
Or family.
All you need is one family member with PR, man.
Yeah.
But we get maybe, I don't know exactly what the volume is. Maybe 3 or 4% of our site traffic is Hong Kong and China. Hasn't changed. It's roughly the same. So, and we get a lot. I get a lot of WhatsApp messages from them too. I don't think there's been a change in volume, but it's been consistent. So
consistent. Nothing's changed.
I was trying to look up something for Evergrande, and Jordan's site was like near the top. It had nothing to do with Evergrande, but it was like right at the top of Google. I was just like, what the heck is going on? This guy's
my
good.
guys are doing their job, man.
This guy's good.
We're ranking for keywords we're not even targeting. I love to see it.
Yeah.
That's crazy. Why would that come up? That's
I don't know. I was
interesting.
typing something, right? And I was trying to relate it to Toronto. I can't remember what I was searching. It was something to do with the market that I was researching for today's show. And then it was like the first, like the sites that were above you were all like big players. And then it was like, you were like the first one. So
yeah, the Google is, I don't want to get too nerdy on the show, but Google's topical relevancy has gotten incredibly impressive. So like if I do a video with you guys about Evergrande, and then it understands that personality is associated, like the relevancy Google can derive is really high these days.
And speaking of that, so now I just want to do one last little thing here. I want to talk about social media. I mean, we do have 2 out of the 6 Power Rangers on the show right now. No, well, I just want to talk about, I mean, Elon Musk just closed on Twitter. It already, I don't know if it feels different already or if it's just my perspective on
I'm actually so excited about that, because I think Elon is going to go in there and figure out how to make their ad platform actually work for once. And like my entire business is based on online ads. It always has been. So the idea that maybe we'll have some targeting and some actual good systems to run ads on Twitter, because like nobody I know in the digital space bothers running ads on Twitter, because you just can't eke out any profit. It's just garbage.
And that's also target anything.
You can't. And so it's brutally bad. And if it was even half as robust as Meta, it would literally shit out money for the advertisers and for Twitter as a whole. So like a lot of people are talking about Elon buying the sinking ship or whatever, right? It's like not a profitable business. It's like, it's not profitable because they've only focused on censoring discourse. They've never focused on advertising. And if they did, they'd probably do much better.
Yeah, I don't know if I'm excited or scared for the new Twitter, because it'll definitely get a little more interesting, I think, and nutty before it gets better. And I think that if you actually read the comments when people were saying, hey, Elon closed on Twitter, a lot of people were like, fuck this guy, he shouldn't be in charge of like the town square, and billionaire this and billionaire that, and he's a fucking idiot because he wants to go to Mars and all this kind of stuff. So I think there will be an attack from all directions to really screw Twitter up right now. And there's going to be, I mean, it's getting vicious on there already. And that's really what I wanted to touch on, is like, isn't it? It's a scary place, this Twitter now, isn't it? I know you guys are smarter than I am on there, but like you won't accept messages now. You won't accept tags on tweets, and I mean, you must get so many messages, Dan, that your head spins on that thing, and so many mentions. It's crazy. And like one day somebody loves you, and one day somebody's calling you a racist bigot and misogynist and like making stuff up, and like one day you're the darling of Twitter, and the next day you're a scumbag. It's like, it's a dangerous place now.
Yeah, I don't know. I mean, I would just quote Dave Chappelle on that one. Some people drag me on Twitter and I didn't give a fuck because Twitter's not a real place.
Yeah.
Right.
That's true. It's kind of like I mean, YouTube can be like that too. If YouTube comment sections can get pretty fucking vicious.
Buddy, TikTok don't even get that. You want to find give teenagers anonymous accounts. Holy shit.
Hey, yeah, TikTok's probably the armpit of social media comments. I guess.
Look, I mean, people who have things to worry about, if you've done things wrong in your life, and like there's, like I think you got to worry if you could live with all of the skeletons in your closet and are trying your best out there to be a good person. I think that most people aren't really going to take a lot of this bullshit seriously. Like, I think you give these people power by taking stuff seriously.
Yeah. By replying to the comments and battling with them only gives them power.
Yeah.
Yeah,
I
I know. I can't stop though. Like they're so mean and it's such bullshit. Like they make accusations that are false. And then you kind of feel like, oh no, like
The key is not to defend yourself against bullshit.
oh my
allegations.
Yeah, I
gosh.
just like agree. Yeah,
Yeah,
or
it's-
agree or block. Like, I don't know. I mean,
But
there's
you know what? I figure now, like I've been called everything. Like there's nothing anybody can say anymore.
Yeah, look, dude. I mean, like the reality is here is like none of us are important enough to get canceled. Like, I mean,
Yeah.
like, you know what I mean? Like,
Yeah,
so it is what it is, right?
Yeah.
Like, it's what's somebody gonna do? Write my like employer? I don't have one. They're gonna write all my
Right.
clients.
Yeah.
Have fun. My clients, like, they know my character. Like, I don't really
Yeah.
care. Right?
Yeah.
They want to spend their time like going through all my comments and making fun of me. Like, I've
Yeah.
had some seriously messed up DMs from people, man. Seriously messed up accusations. But like, I don't really care. I'm like, bah, cool. That's kind of like sounds shitty. Sorry to make you feel that way. I hope you have a wonderful life.
I put something up today. I was like, there's a whole other Twitter in the DMs. Like there's a whole other thing going on in the background than even in the foreground.
I don't
Yeah,
get
I mean,
any,
look-
man. I don't get DMs. I must be the lucky
You
one.
blocked it. You blocked it. You can't.
Oh, did I? Is
Yeah.
that why?
There you go, buddy. Open those up.
Open those up and
This guy's like, what am I
watch
missing
what
out on?
happens.
No, but I mean, the reality is like, look, I made it pretty clear for my, I think that you have to go into social media with a clear vision on what your objective is there, and anything that interrupts that, stop, like, just don't engage with it. Like, so for me, I want to advance the real estate industry and be honest about that. And, I'm not there for drama. So people try and rope me in for drama, and then they're very quick. They're like, oh, why aren't you like providing an opinion on this? Like, oh, like, so they, like bullying this, bullying that. I'm like, that's not why I'm here. Like, I'm not a elementary school teacher telling kids not to fight. Like, seriously, like, I'm not, like, I'm here for a clear objective. Yeah, that sucks.
Sure.
But like, you can disengage with it just as quickly as I can. So
Well,
anyway,
we'll end with a quote that I always think about when it comes to social media. The opposite of conformity is courage. And that's how I live my social media life.
Yes.
Thanks, guys.
Well done.
We're at the end. We appreciate you all. You guys all have wonderful channels. We're going to put the links up. So if any of our listeners haven't visited your channels, they're way better than ours. You're missing out. And follow them all on social media as well. And we look forward to the next one, guys.
Thank
Thanks,
you so
fellas.
much.
Thanks, guys.
Thank you.